Hi, good morning. Good morning, everyone. Is my voice loud and clear? Is it coming absolutely clear? Hi, good morning. Good morning. Abhishek, Amit, Ankit, Avinash, Darshana, Dipali, Daneshwar, Farooq, Gopal, Hausala, Kaustav, Maitreyi, Prithviraj, Samir, Pushpanjali, Samir Doshi, Reena Gupta. Hi, welcome. Sangeeta, Soumitra. Hi, great. Super. All right. So what are we going to discuss today? Today, our session is absolutely about bringing about a change in the behavior of your clients. Okay. Now, what do I mean by bringing about a change in the behavior of your clients? So this is little, different from what we generally do. Tell me, how many of you have lost a client even though the returns were not bad? Right? Yes, in the chat box. How many of you have lost a client even though the returns were not bad? How many of you were shocked when a client switched because you thought that the relationship was very strong? How many of you got shocked when a client switched the money from your ARN to somebody else, although you thought that the relationship was super strong? How many of you realize later that the client didn't leave all of a sudden? He was drifting away from you for months before that. This is what we are going to discuss today. Okay. So let me tell you something that most advisors don't want to admit. Clients don't live because of markets. They live because nobody has trained them how to behave when the markets become uncomfortable. Every client of yours who switches was confused long before he redeemed the money. And that confusion, what was there in the client's mind, didn't reach you because confusion is silent. And you know what is loud? Panic. Till the time the person panics, you won't hear it. But till the time it is confusion in their mind, it would remain silent and you would never get to hear it. How many of you agree to this? Confusion is silent and panic is loud, right? And this is what we are going to go deep into today. And then exits happen very, very quietly. Most MFDs believe that their job is to give good advice and good products. And that is only half the job. The real job is to manage the behavior before emotion takes over. And if you don't define the behavior early, just a second. If you don't define the behavior early, clients will define it themselves. They won't wait for you. And self-defined behavior always looks like comparison, doubt, and then the switch. And let me be very direct and blunt over here. If a client switches even after 5 years with you, it is not a betrayal. It is a missed, behavioral identification from your end. Somewhere along the line, the client did not know what to expect, how to react, or what rule to follow when discomfort takes over. And in the absence of any ideas and rules, fear will take charge of the situation. And most often, as advisors, we respond quite late. We explain more, we try to reassure, we try to defend our decisions, and then the damage is already done. Today's session is not about stopping redemptions. It's about stopping the thinking that leads to redemptions. I will repeat. Today's session is about stopping the thinking that leads to redemptions. I'm going to show you a very simple, behavior lock formula that works for HNIs, works for retirees, works during volatile markets, and works before any kind of panic that sets in. Okay? So this is a small little system. I'm going to share my screen, and then all of you will have an opportunity to take screenshots if you want and move ahead. All right? Ready, everyone? Absolutely ready? Okay, super. Good to see all of you. Many, many new faces, new old names, new faces. Good to see you. Mr. Venkat Chalam, Sumit, Yatin, Sonal Sharma, good to see you. Suman, all right. Okay. Okay. So I will be sharing my screen. Let me know once that is visible. Okay. Can you see my screen, all of you? Is the screen visible? Screen is visible? Yes. Okay. Okay. All right. Yes, visible. So this is a behavioral lock formula. How do I lock the behavior of clients so that it doesn't drift away? बहुत बारीक सा चीज है, ओके? बहुत ध्यान से समझने की कोशिश करेंगे, ओके? It's a very, very minute, small little thing. How do I lock the behavior of a client such that they don't drift away? Clients don't leave plans. आपने जो भी plan दिया है, they are not actually uh, disregarding that. They are not disobeying that. They actually leave when there is unmanaged emotions. Churn doesn't happen in bad markets. It happens when the behavior is unlocked. What is the old way of doing things? The old way of doing things is that you would explain returns, you would justify performance to keep the client. The result is very defensive and it is like firefighting. Today, we'll try to see whether there is another way of looking at it. So I must, the new truth is that you must define the behavior rules to protect the client from themselves. So that is the result when you are in a leadership position. So switching is definitely not a client problem. It is a behavior problem. Okay. So now what is the intervention? There are 4 ways. Okay. And this formula must be used before volatility, not after the panic. Always remember what we are learning today. This intervention has to happen before the panic has set in, because panic aaya to that means it has already become loud. This doesn't work at that time. Okay. So name the behavior. Rule number 1, surface the pattern without judgment. 2, separate decision from outcome. 3, the lock. So you would pre-agree on the reactions. And finally, you give control flexibility. You would give control flexibility. Okay. So phase number 1, what do you do? What is diagnosis and separation? Step 1, name the behavior. What usually causes stress is not returns, but second-guessing decisions once markets move. We need to speak about this. You definitely can take a screenshot of this. If anybody is interested, you can definitely take a screenshot of this page. You have to surface the pattern, not the product. Make the client feel understood, not corrected. Step number 2, a decision can be right and still feel uncomfortable for some time. That doesn't make it wrong. Do you get the power of this sentence? A decision can be right and still feel uncomfortable for some time. That doesn't make it wrong. Clients confuse a good decision with a good outcome. Remove the guilt and self-blame. Getting it? How powerful is this? A decision can be right and still feel uncomfortable for some time. Feeling uncomfortable does not mean that the decision was wrong. It means the market is doing its job. Phase number 2, pre-agree on the reactions. When markets move, discomfort is normal. When that happens, the plan is not to change direction immediately, but to review calmly. Set the rule. Okay, this is leadership position. If at any point this stops aligning with your goals, we will reassess together, not react alone. Take a screenshot. If at any point this stops aligning without your goals, we will reassess together, not react alone. Clients switch when they feel trapped in a situation. You have to prevent that silent exits by offering controlled flexibility. Markets will not always feel comfortable. That discomfort is normal. What matters is how we behave when that discomfort shows up. Our agreement is simple. We review, we don't rush, and we don't switch in emotion. Do not justify anything. Do not add returns. Do not explain. Silence here is the most powerful tool that you will have. Have you guys taken a screenshot of this line? Markets will not always feel comfortable. Every word in this line has been inserted with a purpose. Every line. Okay. Have you guys taken a screenshot of this page? Right? Yes, if you've done that. I'll move to the next one. Okay. Super. So what is the mechanics? Markets will not always feel comfortable. Let's look at the mechanics of this. It will reduce impulsive actions. Pre-frames behavior, reduces switching. We review, we don't rush. Clients confuse discomforts with stupidity. We must break that link. Okay. Now let's look at some situations like we are talking to high net worth individuals. What is the driver over here? They try to be in control. They are ego sensitive. In volatile phases, even experienced investors feel the urge to re-evaluate. What has worked best with families like yours is having a simple rule. We review decisions calmly, not under pressure. Retirees. At this stage, the biggest risk is not volatility. It's reacting in worry and regretting it later. So our rule is simple. Whenever something feels uncomfortable, we pause and review together. Why it works? Because it removes the blame, focuses on regret protection. Pre-investment agreement. Okay. Markets will not always feel comfortable. You have to speak this before the investment starts. There will be phases where decisions are questioned. Our agreement is that we review first, not react alone. That's how long-term outcomes stay protected. Then you ask the question, are you comfortable working this way? This question is super powerful. Speak the first para, ask the question. This is a trap question. If the client hesitates here, they were always going to churn later. If the client says yes, you're in agreement. You have locked the behavior of the client once for all. Clients ask for frequent portfolio updates. So if two or more are true, churn risk is critical. Client compares with friends. Clients ask, should we change? Client avoids review calls. Clients ask hypothetical exit questions. Clients suddenly becomes fee sensitive. Client forwards market fear messages. Client wants something safer. If these things are happening, install the behavior lock formula. Use those lines. Even you can send it out on a WhatsApp as well. Send it out during volatile phases. Send once, calmly, but no follow-ups. Market phases like this test patience more than plans. Our approach remains simple, review calmly, avoid rush decisions, and stay aligned with goals. We'll speak properly at the right time. Why does it work? It works because it normalizes the discomfort, reinforces the rule, and shows presence without panic. Remember, clients don't leave advisors who set the rules. They leave advisors who disappear when rules are needed. Name the problem, name the disease, name the emotion, lock the behavior, and then fill in with that trap question. Switching happens when there is a vacuum in that behavior. Okay? You will never be able to there will never be a need to do firefighting after this. All the very best, everyone. Have a great day ahead. Built in your AUM. I'll see you exactly at 10:10 tomorrow. We'll start the session at 10:15. You can start joining at 10:10. Send out the link to everybody you want. This is for everyone. Okay? This is absolutely open for everybody to join. All of you know that. You can send it out to your communities, other members, other wealth managers, everyone. All right?